Welcome to Barchart's weekly series of webinars designed to help you, the trader or investor, to navigate Barchart's pages and tools to aid you with your decision and trading making process. Today's session, new highs and new lows. Okay, so let me share with you something often heard among momentum and trend traders, an expression that they say, you can't make a new high without taking out the old high, right? But with that being said, let me share something with you, or at least share a scenario with you, right? Trading on this idea of emotion. So here is a chart of Apple, and what we see here is that Apple is making a new high. As a matter of fact, if we look back to July, that was an all-time high that we broke out of. And then Apple starts moving up. And, you might have said, hey, I want to buy Apple, but it just moved up, $10 overnight. I don't feel like I want to chase it, right? But then it makes another new high, and then it makes another new high, and it keeps going up, and it keeps going up. And you're like, oh, my gosh, I'm missing out on this great big move, right? I'm ready to buy. I'm rushing in there. I'm getting FOMO, fear of missing out, right? And you know what happens, right? As soon as you buy it, right? As soon as you push that buy button, what happens? Boom, price retreats, right? And price moves back. And now you've moved from FOMO, fear of missing out, to regret. And so, we've all experienced this, right? And this is part of the growing process of traders, right? Why did I buy the top, right? Okay. All right. Well, hello, my name is John Rowland, and today I'm going to hopefully show you how to discern the difference between emotional buying and discipline when it comes to buying new highs. As well as at the end of the session today, hopefully I'm going to get an opportunity to show you a technical tool that is used by professional traders to help you decide if the tide of momentum is either rising or falling. All right. Now, always with me today is our monitor, that Jean Baker. Hello, Jean.
Hi, John. Hi, everybody out there. How are you?
How you doing today, Jean? You getting excited for Thanksgiving?
Oh, gobble, gobble. You sure? You can bet I am. Yeah.
As always, Jean is here to help me watch the chat box and answer your questions as we go through today's session. If you have a specific question on something that I'm showing you, or a tool that's in Barchart, Jean will be able to answer those questions. If it's more specific to our subject matter, she'll pass those along to me. I will apologize in advance that I would try to get to as many questions as I can, but if I don't get to your question, don't get upset with me. I would suggest that you send those questions to support@barchart.com. Our crack staff will answer those questions. And again, if they feel or you want to forward that question to me, just request that and they'll send those questions on to me. I do answer all questions. It just takes me a few days to get to it. So don't get mad at me if you don't hear from me in a couple of days. But I do answer those questions that they do forward to me, all right? So, Jean, let me ask you a question.
Okay.
What do you think is more important in the decision to buy a stock? New highs or new lows?
Well, once I get over my FOMO, I would say, John, that's going to depend on the stage that the stock is in the trend.
Exactly. Yeah, exactly. Right. Where we are in our trend, that could be very important for us. And we're going to examine that throughout today's session. All right. But before we get there, we need to do a little bit of business, okay? So remember that any decision to buy or sell or hold or trade a security, commodity, or investment involves risk, and that any decisions that you make should be based on advice that you get from a qualified financial professional, right? And just understand that, what we're going to look at today, we're going to give you a lot of examples, especially markets that are making new highs, that these are not endorsements or should be construed as buying opportunities. They're just demonstrations and for illustrative purposes. And that remember that past performance is not indicative of future results, all right? Now, the other thing that I want to also remind you folks is that all of our webinars are recorded, and you do have the opportunity to find the library under the tools free webinar, and here you can find all the webinars that we've been doing throughout the year, and this one will be there as well. Okay. All right, we'll come back to that in a second. All right, so what is the definition of an uptrend? Well, an uptrend is an overall move higher in price created by higher swing lows and higher swing highs. Now, as soon as you read this, a lot of you might say, why is the definition of an uptrend defined by a low? And that's because that's what a trend is, right? A trend is a series of these impulse and corrections, waves of price making new highs and then price retreating and making a higher low, right? So what we're going to do as traders is we use the highs to confirm and affirm an uptrend, but we're going to try to look for buying opportunities when we make these higher swing lows. It's a little counterintuitive than most people would think. Remember, an uptrend is not a market that goes straight up, right? That's a rocket ship. That's not what we're looking to do. So trend traders utilize uptrends by looking for those opportunities when the market pulls back, right? Or as it begins to rise again, right? After it's already pulled back, right? Attempting to capture those greater profits as the market makes that new swing high, right? That new swing high. And this is a definition that comes from Investopedia. Hey, I said it right, Gene. Yesterday I was getting that tongue-tied on that one.
Got it right, John.
Woo!
Yeah.
Okay. All right, so that's what I want you guys to concentrate as we work through this session, that we're looking at series of swing lows and swing highs, these impulse and corrections, and where we're going to look for those buying opportunities, okay? All right. So here we are in a bar chart, and I'm going to go to stocks, and there's our page. Whoops. There's our page, new highs and lows. And let it load up. All right, so it's right now it's showing us all U.S. exchanges, all the stocks are making new 52-week highs, right? So we can start to categorize or filter through these pages here inside the depth of this page. So we have all exchanges. We can look by individual exchanges, the New York Stock Exchange, NASDAQ, over the counter. We can look at ETFs. We can look by market cap, right? If you want to look at large caps or mid or small or micros. Notice you can also do it by price, right? Those stocks that are less than $10 and those stocks that are greater than $10. A lot of folks like to look for those cheaper stocks, those sub $10 stocks. You know, they can buy more shares, and a lot of these stocks are the ones that are about to make those greater potential gains. Not necessarily, but you know, that's kind of the thought, the process they have. Notice we do also can filter based on volume, and notice that the threshold here is 100,000. So if you're looking at stocks that are under 100,000, you're probably looking at small to micro caps. Above 100,000, you know, now you're getting to the larger small caps or mid caps. But when we talk about large caps, you know, we could talk about 1 million shares, right? So, you know, you can pick that based on the volume as well, right? We can filter based on new highs over a time period, and that's going to be important for us too, because we are going to look at these impulse and corrections in the big picture, but also in the small picture. So we can do it by month. We can do it by 52 weeks or year to date, right? 2 years, 3 years, 5 years, 10 years, all the way out to all times. Now, what I want you to realize is if we're looking between 1 month and, 2 years, right? The data that you're going to look at is going to be based on a daily data collection, okay? So here's the 2 year, and notice that if I go over here to time, it's actually giving you the time, the last time that trade was. That's telling you that it's based on a daily, right? Especially when we're looking at these highs and lows. If I go to 3 to 5 years, right, now I'm looking at weekly data collection, right? And you can see that the data we're looking at is for the week of, right, for the week of. And if I'm looking at 10 years or out, then it switches to monthly. And so you'll see here it says for the month of. So just be aware of that as you're doing the different time frame analysis, okay? The other thing that we can do in here is we can go through our filters, and we're going to do that in a second, all right? We can look at highs. We can look at markets that are making new lows as well, right? How many markets are making new lows today, or let's say over a 52-week period. Now look at that, there's only one stock today that is making a new 52-week low, right? We can go into a summary here, and this was kind of takes all those in a big picture for us, right? Overall market, the individual exchanges, price, and volume. And so you can see that there are numbers here. So we're going to do two things on this page. First is we're going to look at this in the big picture, right? We're going to look and see, what is going on across all of our markets, right? Are we seeing greater number of highs versus a greater number of lows? Now you can see the overall market right now, today, there's 1,100 stocks that are making new 1-month highs, right? I think it's kind of timely that we're talking about new highs and lows as today, or as this week has been trading, that the market is making an all-time high, and we're seeing a lot of stocks are representing that, right? But even on the 52-week basis, there's 213 stocks that are making new 52-week highs. So we could look at this number and we can compare it with the lows. Again, look here, we see 213 are making 52-week highs, yet only one is making a 52-week low. So what is that telling us? Well, it's telling us that the overall market, the overall momentum of the market, there's more stocks are making highs than lows. That could be a good thing, right? Rising tide raises all boats, right? But I can also filter, right, based on the different exchanges, or I can go to this little number here, and if I click on the number, then that's going to take me to a list of those 600. I picked the NASDAQ, not the NASDAQ, the New York Stock Exchange. It's showing me the 621 stocks that are making a new monthly high. Now that's a lot of stocks for us to look through, right? So I'm going to show you how to filter this down in a little bit, but let's go through the data points that are in here. So see if we can learn what things we should look for and how we can do some those comparatives that we like to do. All right, so on the main view page here, we have our last, we have our change, percent change. These are all things that you should be familiar. How much volume has traded so far today? So now I'm on the monthly, and it's telling me that in 1 month, how many number of highs that this particular stock has made. And so you can see that Alcoa has made 12 new highs in the last month, right? Now, if I looked at, let's say, the 52-week highs, right, and I go to that, the number of stocks made in 52 highs, notice Alcoa is not there because it's not making or hasn't made a new 52-week highs, right? And we'll do that comparison in a moment. So it's making 12 new highs. So that's telling us that this stock is on the move, right? It keeps making new highs. It's made 12 new highs in a very short period of time, right? And also we can see where it is in terms of price versus its all-time high, or its monthly high, excuse me, and its monthly low. And you can see that we're about 53% above our monthly low, and right now we're only 0.9 off of our monthly high. Now, we're making that new high today. Notice down here, we see unchanged. This stock right now is making that high. So if you see unchanged, that means that it's making that high at that moment. These prices here is really telling us that we've made a new high today, but prices backed off, right? So a lot of these have only backed off fractional. Sometimes you'll see a stock will make a new high and boom, it'll back off 3, 4, 5%. You know, that is kind of a cautionary tale as well. So let's look at the chart here. So I just want to reinforce this. So we see that Alcoa has made 12 new highs in the last month. If I go quickly to the flip chart and I look at Alcoa, there you go. You can see it, right? In the last month, it's made all of these new highs, and this stock is on the move, right? It's still on the move. Now, if I expand my data window and I look at a year, right, this stock is on a nice uptrend, but it is yet to come back and test its most yearly high or 52-week high, all right? Now, when we're looking at our flip charts, I do just want to point out a couple cool things here. If you see this little half moon right there, that is signifying that's the high that's in whatever time frame that you're looking. And notice that way over here on the left-hand corner, it's very hard to see here, but there is a half moon that's red. That's telling you what the low price. That'll help you, give you a little bit of reference when you're looking at your charts, okay? All right, so how many highs have we made in the time frame, right? Okay, so from main view, we can go to technical. Technical. All right, again, our last price, right? Our opinion, right? This is Barchart's opinion. Now, this is based on 13 technical indicators, which is the common interpretation of whatever that indicator is. So there's 13 of them. So you can see that Alcoa right now has an 88% buy signal. So the way this works is, of the 13 signals, if we have, let's say, 6 that are saying buy and we have 6 that are saying sell, that would be a hold, right? We're right in the middle, right? So if we have 7 that says buy and 6 that says sell, then that would be an 8%, right? This is here, it says 8% sell. That means that one more sell signal than one more buy signal. So just to give you reference on this one, 8% would be 7 buy signals, 24 would be 8 buy signals, 49, 56, 10, 72, 11, 88 is 12 out of the 13. And if we get 100%, that means all 13 signals are showing a buy signal, okay? So just be aware of that, all right? Relative strength, right? So this is a data point that we're going to look at as well. And what does it represent? Well, relative strength is a technical momentum indicator. And that's important for us because we're really looking at momentum when we're doing this highs and low kind of analysis, right? And what it determines is, you can see that it's if a market is overbought or oversold based on the conditions of price movement. Now, this is kind of a Reader's Digest definition. So if you ever have a need to have a more in-depth definition for any of the technical indicators that we have, I do want to show you that up here in Tools, you can go through our resources, and there is technical indicators. And if I click on that, that'll take me to a library of technical indicators. And what I've done is I've opened a tab that is talking about relative strength. And it's important here that I think we need to get a little bit more detail what a relative strength is telling us in our process, right? So the main purpose of the study is to measure the market's strength or weakness, right? And a high RSI above 70 suggests that our market is overbought or that we're coming towards the end of a bull movement, right? An impulse. And on the other side, we can see that an RSI on the low side below 30 represents oversold or maybe the end of a downtrend or a bear market. Okay. Now, the other thing that I want you to read here is that an RSI can be used as an overbought or oversold indicator, but it works best when a failure swing, failure high or failure low, occurs between the RSI and the market price. So it does say that this is a standalone indicator, but it does say here that it works better when we look at it in reference to our market price. And that's going to be important as we work forward, right? Okay. The other thing that it says here is that we can use it as a divergence. In other words, if we see one of our indicator is going up and our price is going down, or vice versa, right? This is called a divergence. And the other thing is that true divergence usually requires a little bit more time. All right. And so that perhaps as much as 20 to 60 trading intervals. So when we look at RSI, we can look at a short-term RSI, but we probably want to look at a longer RSI time interval to make that assessment, okay? Now, the other thing here it says is that buying or selling, let's say selling at 70 RSI or buying at a 30 RSI when we're in those conditions of being overbought or oversold, can be an expensive trading system, right? Because a lot of times what the market will do, it'll extend, right? It'll go farther than just 7. We're not going to use that as, you know, a go-to, right? We're not going to say, hey, 70, boom, I'm coming in to sell, or 30, I'm going to come in to buy, right? Because the market could overextend itself a little bit, right? But again, what does it do? It does not predict, it just tells us that conditions are ripe, that there's a potential for price to change. All right, so keep that in mind as we go through our process. Right, historical volatility. Again, this is a measurement of how much price moves from what is normal, a deviation. This is helpful for our options traders, but also we're going to look at some deviations a little bit later. Average volume. Right, that's nice to see. We want to see that our volume is increasing as we're seeing prices moving. And then we have a reference of our highs and lows. And so you can see Alcoa right now at our 52-week level, the price is 1877, and the range between 52 weeks is, you know, $5.16 and 21.92. So where are we in this range of price? Well, we're in that upper third. That could be a signal that we're getting towards the top of our market. Now, if we take out the high, that could be a new story, but we are getting towards the higher end of that price range. Under the performance filter, we have something called weighted alpha. And this is going to be a nice little tool for us because weighted alpha looks at the price appreciation or falling over that 52-week period, right? And what it does is it weighs more towards the most recent input or the recent price action. It gives it a little bit more weight. And so we're going to use this as a comparative tool, right? We'll look for markets depending on what alphas that we want based on where we are in our cycle of price. So for instance, here, Alcoa, you can see that its alpha here is a plus 36, right? But we look at our year to date, it's still down 13%, or it's 52-week, it's still down 10%, right? So it's appreciated, right? It's done a big appreciation in the short term, right? In the short term, right? 1 month, we're up 48%. 3 months, we're up 26%, right? So this market, right? This is telling us that this market is moving. It's in that impulse phase, right? Again, let's look at the chart. We see that price is on the move, right? We're seeing a lot of price appreciation in a very short period of time. That's why we see a larger alpha, okay? Again, look at, let's say, Asbury Auto Group here. Again, its alpha is 54. Here's a stock that is actually up 16% for the year, right? Year to date, 52 weeks, year to date, 14%, right? But the alpha is 54. So this is showing us that price has really accelerated in the short term. So Asbury is ABG. Let's go to our chart. ABG. And yeah, look what we see here. In less than a month, we've gone from $100 to $130, right? What's that, a 30% increase in price in just 1 month time, a big acceleration in price. But this stock is still in an uptrend. So where are we in that uptrend? Well, it looks like we've had a nice impulse, a small correction, and now we're impulsing again. So there could be some more room for this to run higher, but it's already appreciated a lot in a very short period of time. All right. Fundamentals. Now, we're really talking about technical analysis today. So fundamentals is definitely part of the toolkit I'm going to use in my trading. But for this session, we're really going to concentrate more on technicals. So, if you have some fundamentals that you like or you rely on, then I would encourage you to continue to use those. But there is a technical value here that we can use, and that's called beta. And beta basically looks at how is the stock performed based on the S&P over a 60-month period, right? And the way you look at this is if a stock is working in coordination or correlating to the S&P equally, then its beta would be 1. Any beta above 1, it tells us that that stock has a greater price appreciation when the overall S&P market moves. So we can see for Alcoa, its beta is over 2. That's telling us that it's outperforming the S&P, that is doing well. And that's good for when the market is going up. But it's also bad for us as traders when the market goes down. It just means that when price retreats, that Alcoa could retreat a lot more in a performance-wise than it would the S&P. So beta is good, but it can also be detrimental in downtrends. So, just that's one thing to keep in mind when you are looking for these impulsing markets, all right? Okay, so let's go back to our summary. And we're looking at 1 month highs for the stock exchange, the New York Stock Exchange, and we have 635 stocks that are making new highs, right? That's way too many for us to dig through in a short period of time. So let's do this. Let's do a screen on list. We're going to come in here and we're going to screen on a list. Now, all those elements that we just looked at, all those values, all those data points, we're going to kind of put them together. We're going to do some comparisons, right? And we said we're talking more about technical analysis, right? This is where I can add those filters. So let's see some of the technical analysis that we're going to add. So first of all, I'm going to look at volume, average volume. And what was that one volume that we had? Well, we had the 20-day average volume. I'm going to add that. And remember that threshold was 100,000. That was that first threshold. But we're looking at the New York Stock Exchange. So these stocks tend to be bigger or larger caps. So let's use, let's say, 500,000, right? Next thing I'm going to do is I want to do a comparative, right? I want to see what my volume is, let's say, on a 5-day average. I'm going to add that to my filter, but I'm not going to put a value on this. I want to compare it to something else. So I'm going to go down here. I want my 5-day average greater than a field. Now, what field am I going to choose? Well, I could use the 20-day, but I already have it here to reference it. I'm going to look at 50 days, right? A little bit longer period of time. And why do I do this comparative with these 3 different moving volume averages? So traders will tell you that volume is a good indication, rising volume is a good indication of a strengthening trend. So what we want to see is, as our market is impulsing or as we're making these new highs, we want to see our volume rise as well, right? That's telling us that traders are putting money into these markets, that they're They're investing in these markets. They are making commitments to those markets. Now, I don't want to just see a one-day volume, right? I don't want to see a spike in volume when a market makes a new high. I want to see volume build as we're coming to an area where we're getting to new highs, and I want to see that volume carry on, right? That's what we're kind of looking for in our process, all right? All right, so after we do volume, we have our relative strength. Okay, and right, we have different relative strengths. Remember, we said that we might want to look at a higher relative strength data set because that will give us an opportunity to see some of those divergences, right? But I also could set in a lower relative strength. You know, you might be more familiar with a 9 or a 14-day. Wells Wilder, the creator of relative strength, uses 14 as his. But we saw that we're going to use the 20, so you can do it. But here, what I'm going to do is I'm going to go in and create a field here of, not, excuse me, a field, a range of values. And we did say that, you know, overbought or oversold was that 30 to 70. So we could do 30 to 70. Now, if you wanted to widen that range to 25 to 75 or 20 to 80, you know, just realize is that you widen your RSI field, you're going to gain more candidates, right? All right, what else can we add? Well, let's go down here and our weighted alpha, right? And we're going to add that. Again, we have an opportunity here to pick what weighted alphas we're going to be particularly looking for. Now, somewhere between medium and high is where we probably want to start, but I will put very high here just so I can show you some examples, hopefully. But we want to see stocks that have a smaller weighted alpha, smaller price movements in the short term, because those ones might be ready to make some greater gains. And we want to kind of avoid looking at ones that have already made big price movements, right? Have already impulsed, right? Already made those big alphas, all right? Okay, and then I'm going to come back in here and move away from technical analysis. Remember, we're talking about highs and lows. So we know we have the data of what is a new high or new low. We have that in our filters, but we want to do a comparison. So we're going to look at a number of highs over, let's say, a 52-week period versus a number of highs, let's say, over a month period. Okay, and let's add that. All right, so we have some qualifiers and we have some comparatives. Right, so what did we say? It was 600 or plus so, and now we're going to narrow this field down. 57, still a lot, but we've narrowed this down to about less than 10%. Okay, so let's see if we can find some examples to show you here. All right. So the first one I see right here, ACCO Brands, right? It's made in the first month, this last month, it's made 8 new highs. And over the 52 weeks, it's only had 7 highs, right? So what is this telling us? Well, it's telling us that in the 52-week period, most of the highs that we've been seeing, it's made 8 new highs in the last month, but it's only made 7 in this year. So this could be a stock that is about to break out or is really starting to move. Now, what's its alpha? Well, its alpha is only 4. Again, it's probably not a big price mover yet, right? Not had a big price movement. Let's look at that chart, ACCO. Right? So it has made a big move in the short term, but as we look at it based on its year to date, right, it's kind of been in this range. It's just starting to break out. That's kind of what we want to look for. We want to look for these kind of stocks that are starting to make those greater gains, right? So this one, you know, I think we could talk about, you know, has this really started an uptrend? Yeah, it's definitely done an impulse, but we need to wait for that what? That's higher swing low. Have we gotten that higher swing low yet? No. So this would be a good candidate for us to wait patiently for one of those corrective stages, or maybe wait to see if it bases here and then impulses away again. All right. Now, some of the things we can also do when we look at our charts here is we can do some comparative analysis in terms of how much we do impulse. So you can see that the start of this uptrend here, here was a low around 350 and it impulsed up to 540. What's that, about $1.80? Here we made a low around 450 and we went up to 630, another $1.80. Here we made a low of around 530 and we went up to 760, 230, right? So $1.80 to 230. Here we had a breakout move around $5-6 and it went to $7.60, right? Another $2 move. So what has this one done? Well, it's gone from 520 up to 790. So in the comparative of other recent waves of price appreciation, this is one of the highest ones that we've seen. So this is definitely one of those candidates where I'm going to be more patient. I'm going to wait to see if I can get a swing low on this one to look for a trading opportunity. Okay, let's see. Let's see what we got here. All right, so here we see Crown and Castle has only made 4 new highs in the last month, over 29 over a year. So this is probably a stock that is telling us that it's continuing to move up. And it's made a lot of new highs over the years. So this one was probably going to be trending well, right? And that trend has probably been carried over for a longer period of time. And that's CCI. Let's see, CCI. All right, and let's look at a year as a date. And yeah, you can see that this stock has been trending well throughout the year. Now, it looks like, October was kind of a weird month for all stocks, that our uptrend probably had stopped, and now we're making, looks like beginning to make a new uptrend, right? And now a lot of series of impulse highs, corrections, impulse highs. Now, for those of you who are chart analysis people that like chart formations, I mean, that is a textbook W, isn't it, right? And we're now breaking above that W. So here we're now to make an impulse move. So how much was our last impulse? 154 to 169, $15. Here's our low, 157, $15. Would put us around 172. Right in the range where we see a recent high. So we are in the impulse here, but we're probably getting close to the end of this impulse. Another stock that is looking favorable to us, but again, probably want to wait for that correction. All right, let's see what other ones we have here. All right, here's ESNT. It's only made 5 new highs in the last month and 4 in the last year. Relatively low alpha, and we do see that our volume is starting to increase. We have a nice RSI ratio, and let's see what that one looks like. So let me type that in. What I've done here is you can go over here on your links page here, and you can right click on interactive chart, and that'll open another tab, and that was ESNT. And this way you can look at charts, individual charts, and still keep your screen up, your screener up, right? And yeah, look here, this is one that is kind of just starting to get going again, right? So this would be a nice candidate of a market that is trending higher and is starting to impulse again. So, we can do those comparatives, how much is the length of each one of these waves. And it does look to me, for instance, from here, this last leg from 38 to 43, that's a $5 move. And here is our low, 41.77. If I added $5 to that, well, we're right at that value. So again, market has already impulsed, and it is bumping up against a recent high. So again, a cautionary tale, but let's see if we can get a pullback. And then when it breaks through this high, we could see another $5 price appreciation. All right. Okay. And then I did see this one before. I'm going to go all the way down to the bottom of the list. And this one, West Rock, where it's only made 5 highs in the last month and 14 over the last year. The reason why I like this one is, here's our 20-day moving average, our volume average, and here's our 5-day. You can see that we are building volume momentum. And the alpha here is a little bit high for my taste, but it's telling me that this stock is starting to move, right? It's starting to move in the short term, right? And so that is WRK. And this is kind of funny that I was looking at this morning. One of the cool features that Barchart has is if you draw on a chart and you're using your interactive chart, you can set your defaults that, whatever studies or lines that you draw will stay on your chart as they are. And so this was one of the stocks that we looked at in one of my other sessions. I think this was a cover call or naked put. And let me go to the yearly so we can get a little bigger picture here. And, this is really what we're looking for, right? Here we see those impulses and corrections, right? Impulses and corrections. And right there's that impulse where we made a new high, right? We took out this high, right? There's that impulse, right? And there's that correction. So be disciplined, wait for those impulse and corrections. But now what are we doing, right? We've had an impulse correction, and now we're what? Impulsing away. But not only are we impulsing away, but we're getting very close to taking out our 52-week highs. So that could be a signal that this stock has been performing throughout the year, as that's what we see, but it's really starting to gain some greater momentum. All right. So let me pause there for a second. I see some questions that are popping up. So the first question is there a reason for not using less than 9-day relative strength? Yeah, you can use whatever lower time frame relative strength you want to do. Just realize that the lower the data set you go, the more distorted or unreliable as a predictor for our confidence, so to speak. So I think the 9 is probably the lowest you want to go to. What is the range of lower alphas? Maybe idea. I think what you want to look at is it's not really the alpha itself, it's the alpha and the price action. So, you could actually have a negative alpha in a corrective stage, right? As the price is backing up. Remember, it's greater emphasis in the most recent move. So I would actually like to see a very low alpha in, let's say, a shorter period of time. Let's say in the last month, I want to see my market in a corrective stage pulling back. But if I was looking at, say, over a longer period of time, if I'm looking at an alpha that's, let's say, in the 20s or 30s or 40s, that's telling me my market is still moving in a positive direction. What I want to avoid is markets that have big giant alphas. And let's see if we can find one of those examples. Right. So here's L Brands. It's up 127, right? And that's LB. So let's change our stock here to LB. And this is really telling us that this stock is really kind of taken off, right, in a very short period of time. Now let's go to our yearly, right? And so over a year's price, right, it's gone from $10 to $36, right? In the short term, it has kind of slowed down. Its momentum is slow, but it's already made a big price movement, right? So we kind of want to avoid those ones, right? Or those ones that show more parabolic type price movement. Okay. Do you suggest, Sergio asks, do you suggest an ideal entry for 52-week lows? Yeah, Sergio. So we're going to look at that tool in a second. Okay. So I'll help you out with that one. All right, and Janet asks, for the last stock you mentioned, it was gaining momentum, and you're saying that price continued to going up. Yeah, it's gaining momentum, right? We're seeing greater volume. We're seeing it's taking out shorter term highs. It's getting into an area of extension, right? An impulse, right? In terms of our trend, where we are in our trend, right? We made a swing low, and now we're starting to make a new higher highs. Yeah, so good question there. Yeah, okay, so I love when a question comes in that takes us to my next segment. So Al asks, can you show those filters again? Yeah, Al, here you go. Ready? All right. So what are we going to do? We're going to screen on our list, right? We're going to add the 20-day average volume. We already have that in there, but we just want a value of 100,000. If I'm looking at larger caps, I could raise that up to, 200, 300, 500, a million. We're going to do a comparison. We're going to look at our 5-day versus our 50-day. We're going to add that 50-day RSI. We're going to look at a 20 or 14-day RSI. And again, we said that the oversold or overbought is between 30 and 70. If you wanted to widen that a little bit, to get stocks that are on the cusp, that's fine. We're going to look for those weighted alphas. I think that was, who did ask that question? No, right? Dennis asked that question. So Dennis, yeah, we want to be in that minus 15 to, maybe about plus 50, okay? And then we're going to do that comparison of looking at a series of 1-month highs versus our 52-week highs, okay? All right, so I have about 15 minutes here. This is where I really want to get you guys at, all right? So this is going to help you take your trading to the next level, all right? So here it says market momentum, right? So this is what we're talking about, right? We're talking about market momentum, right? As a market is making these impulses, right? So this gives you kind of a snapshot of what's going on in the market today. And it also breaks it down. If you really want to go into the weeds here, you really can break it down into multiple different time frames. But you can see for today, for the New York Stock Exchange, we have 1,200 advancers versus 800 decliners, about 2 to 1. And that's telling us that the momentum for the market for today is up. That's what we want to see. We want to see that rising tide, right? And the other thing that you can do is, you can look at how many are in the components are in each one of the different classes. For instance, the New York Stock Exchange has 1,900 stocks, and what do we say? 600 or 30% of them are making new monthly highs, right? So that's pretty significant, right? Well, here it is. Yeah, it's right there. 645 is making 34%, right? That's a very strong number in terms of market momentum. But I want you to come down here where it says market performance indicator, all right? And this is a really cool little chart that we're going to use, and we're going to manipulate this chart a little bit. And you can look at 5-day, 20-day, but I'm going to look at a 50-day. But again, look at this over the range of all the different data points we have here. How many stocks, right? This indicator is based on the percentage of stocks that are above their individual moving average. And so these are the moving average periods that we're looking at. And you can see that across the board right now, that 80% of all the stocks that are out there are all above all these moving averages. That's telling us our market is, the tide is rising. Matter of fact, not only is it rising, but we're probably getting very close to high tide, because, you can't get any greater than 100%, right? So we're getting at the high end, right? We're at the longer leg of our impulse. Now, could the market still go higher? Yeah, it could go higher, but broad picture here, we're seeing that the market is impulsing. So I'm going to go to the 50-day moving average. Those stocks are above the 50-day moving average. Now, my default window right now is in candlesticks, but this one, I would say go to your bar chart one. It's just going to make it a little bit easier to do this discussion. And again, what we're seeing here is we're plotting, the stocks that are above their 52-week highs. Again, it's very similar to a chart of a price chart or a stock chart, right? And we can see that our market is in an uptrend, right? It's making higher highs and higher lows, right? So it is impulsing right now, right? So it's in that impulse stage, that leg of where rising prices, okay? So what we're going to do is we're going to look for buying opportunities when price is low, right? Or when the momentum, in this case, is low. So we're going to look for stocks that are making new highs in shorter period time frames as the tide starts to rise, as the momentum changes from going down to going up, right? So if I'm looking at a stock that is making a new high in a monthly or 6-month or 3-month or even a 52-week high, I want to see that the broader market is also starting to gain that positive momentum, right? Now, what the cautionary tale is, we looked at a lot of stocks. A lot of stocks are making these new highs, not only in the monthly or the 52-week, but the momentum of the market has really expanded, right? And so what we could be seeing is at the end of that impulse, right? We could, maybe not. So what can we do? We're going to come in here and we're going to compare this. Oop, open this up. Come on, wake up. Now my computer has frozen. Uh-oh. Always happens, right, Gene? That's part of the...
always happens. Can you just directly type in your symbol?
Yeah, I can't even. Oh, Christ. All right, let's try this. Let's change screens and come back. Let's go back here. Let's go into this one and see if we can do that. Improvise, adapt, overcome, right, Gene?
Exactly.
All right.
There's about 100 different ways to do the same thing on Barchart. You just have to find them.
All right, so we come in here and compare. Hopefully this will work. All right. And there's our S&P. Let's apply that. And what we've done now is this blue line represents the price of the S&P, right? And again, you can see how the S&P is moving. And so this is what I'm talking about, right? So here we see that our momentum is low and the S&P is low, right? And now our momentum is starting to change, that more stocks are getting above that their 52-week moving average, right? And so we can see that rising tide raises all boats, and the S&P price has continued to move higher, right? So we're going to look for those buying opportunities when our market, our stock is in the corrective mode, but is starting to make new highs in whatever time frames that we're looking for as the overall market is starting to rise, right? Starting to move ahead. That's where we're going to make that coordination, right? We're going to make that looking at recent pivot lows, right? That swing low, and waiting for that low, and then waiting for that market momentum as the market moves higher. Now, remember we talked about relative strength, and we talked about how we can determine if the market is oversold or overbought based on that value of 30 or 70. So what we can do here, which is kind of the neat little trick that I'm going to show you, is here I have two different data sets, and they're based on, one is based on price, one is based on a moving average or moving averages of price of stocks. And what I'm going to do is I'm going to come up here and I'm going to go into studies. And I'm going to create something called a Bollinger Band. And a Bollinger Band, again, I would go to the library to see what is the definition of a Bollinger Band. Bollinger Band looks at standard deviations. How much has price moved away from what is normal, right? And what we can see is now we've changed this chart into a relative strength moving average chart, okay? And what we want to look for is those buying opportunities, again, what I said before, where we are low, right, in our relative strength, right? Notice that the value down here was around 23, 24, right? That's a low RSI. Here, we didn't get to 30, but we are outside the Bollinger Band. That is telling us the market's momentum is overdone to the downside. These are buy signals for us, right? I still need to find the stock that's making new highs in the shorter time frames, but I'm going to allow the market to tell me when to come in, when to be more disciplined. I'm not going to be emotional and just jump right in. I'm going to let the market's momentum, right, that rising tide, right, looking for price action to go up, right? Now, there is another tool we can look at, and that's that divergence we talked about. So here we can see that the S&P was moving up, right? And what was our tide doing? Well, our tide was moving down, right? Divergence. Remember, it takes a little bit longer time for divergence to occur. So here we see the S&P is going up, right? We might get emotional. We might be buying stocks that are making new highs, but our momentum is going down. So that's telling us to be cautious and to wait for that buying opportunity. Now, let's look at this peak. This peak came on September 2nd, where the S&P peaked out, but our momentum was going down. September 2nd, right? Remember our example of Apple I showed you in the beginning? Where price went up, we got emotional, we bought because we feared we're going to miss out. September 2nd. So using that tool where we change the moving average of stocks above the 50-day moving average, we look at that correlation between price action, the S&P, the NASDAQ, the Dow, and we put the Bollinger Bands over it, will teach us and give us more of a patient attitude towards price action, where we're using that opportunity to find better buying opportunities, right? Looking for those swing lows when price starts to move back up again, okay? All right, so I'm getting close to the top of the hour. I do see a couple more questions, but so what are the takeaways, all right? We're going to look for low alphas and uptrending stocks that have made recent higher lows, right? That's part of a definition of an uptrend, or are making new highs in those smaller time frames, weeklies, monthlies, right? As the broader market moves from low RSI, right, low momentum, the tide is starting to rise, right? We want to ride that wave from low tide to high tide. We want to wait for the correction, the end of the correction, and ride the impulse. We want to be cautious, right, of stocks that have high alphas, that have already had greater price appreciations, right? When the broader market has already moved to a high RSI, right? Overbought momentum, right? We don't want to buy high. We don't want to buy at high tide. We're going to wait for that correction, right? We don't want to buy the end of the impulse. We want to look at the beginning of the correction, okay? All right, so I do have a couple minutes here before we finish up. Let's see what we have here for some questions. Any questions that pop out to you, Jean, that folks are asking?
People are asking if they're going to get this recording later on, and yes, you will get a link to the recording via email later on today. Okay. John, you want to talk to us about next week's special session, our pre-holiday session?
Yeah, let's see if I can pull that up for you. Yeah, so next week we're going to do something a little outside the box. I'm going to have a Q&A session where folks can come in and just ask a variety of questions, maybe things that you are struggling with, or maybe philosophies of trading, or you've watched one of my webinars and there was a concept that you saw in there that the pieces aren't fitting all together. So here's an opportunity for you to come in there and kind of pick my brain as far as looking at what we can do in Barchart, or even, again, that philosophy of trading. So I would suggest that you sign up if you want to come into it, but also in there, under the link, I believe, right, Gene, we can see that we can submit our questions beforehand. When I would suggest that you would do that. And I think that, there it is, webinar dash questions at Barchart. So send those questions. We're already starting to get some questions. I'll pick about 3 or 4 of those, the ones that come in beforehand. And then as we get into the session, we'll put you guys in a queue, and we'll try to see how many questions we can answer in an hour's time. All right?
Let's see. A couple other things people are asking me is, can they get a copy of the takeaway screen or of your filters? Those are going to be, when you view the recording, you'll see those. I will try my best to see if I can maybe also provide that information on the website for everybody a little bit later on today on the webinar recording. And the other question that's coming in, John, people are asking whether the information you presented today, if this is available for free membership, for premier membership. And if you go back John's showing you where to go ahead and sign up. We have a basic free membership, and a lot of the things that John went through today, including the stock screener and all those filters that he was showing, that's part of a free membership. All you do is you give us your email address. It creates an account for you so you can customize your own flip charts and chart settings, save screeners and things like that. The Barchart Premier, which is a free trial, free 30-day trial we offer, that is going to allow you to do some of the advanced screening. John showed you how to go and screen directly from the new high and low page. That's part of a premier membership, but really there are so many things you can do with the screener to get things filtered down the way that you want to see them filtered down. So I suggest you sign up for Premier for a free trial if you haven't experienced it yet. The other question people are coming in with is, where can I find all of your webinar recordings, all of your past sessions? And John's going to go back to the website and show you where that is. It's under the Tools menu, Free Webinars, and down underneath that blue box at the top, there are links to all these past webinars that are available for anyone to go in and watch. Lots of great information there, lots of great bar chart tools for you to start using. So John, anything else?
No, I wanted to, those of us, you're going to come back next week and join me. Well, I'm looking forward to that. If I don't hear from you guys or see you guys for a couple of weeks until December, I want to wish everyone a happy Thanksgiving. And, stay healthy and the best of all trading.
Thank you, everybody, and hope to see you next week. Bye-bye now.